In this video, I'm going to teach you guys how to spot valid change of character. This is what you use to determine if a trend has switched. A mistake I usually do in the past is I keep on chasing a trend that had actually shifted, or I see a change of character and think that the trend has shifted. Well, that is not actually a valid change of character. Now, in this video, I'm going to teach you guys how to spot valid change of character. I'm also going to give you the essential criteria and rules to identify high quality change of characters. Then I'm going to give you guys an entry model. So at the end of this video, you will have a model to go home with. Alright, so and I'm also going to be walking through live examples. You guys are going to see the live trades that I called in my free Telegram channel. So if this sounds like something you're interested in, please go down and hit that like button and also subscribe to the channel. Alright, so a change of character is basically a shift in structure that signals, notice what I say, possible trend reversal. It happens when price breaks the last higher low in a bullish order flow or the last lower high in a bearish order flow. Now, it serves as an early confirmation. Take note of this keyword. It serves as an early confirmation that market momentum has shifted, signaling a possible start of a new trend. Now let me explain how to spot a valid change of character. For the bearish scenario, for the bearish change of character, you want to see price in an uptrend and you want to see price forming higher highs and higher lows. You guys know what uptrend is. And you want to see price makes a new higher high. Now trade aggressively lower, breaking the previous higher low. Now from now we can anticipate price entering a bearish order flow. Alright, so notice this keyword anticipate, right? Because nothing is certain, you are just anticipating it. Now this is an example of what I just told you guys. As you can see, price an uptrend. This is called an uptrend. Higher highs, higher lows, higher highs, higher lows. And what you are looking for is for price to break the next higher high. As you just see, it has the break of structure. Now you want it to, the next thing you're looking for after price from this higher high is for price to snap lower, breaking this previous higher low. And this is what I call valid change of character. And this last break of structure is crucial because it finally serves as the liquidity sweep and it traps trader above this place. And there are going to be traders that are going to see this break of structure and think, maybe this is the next price has been doing this, doing this. So this is the next, we are expecting the next retracement, and they might put their stop loss at this further. At this, they might look to enter this place and put their stop loss here. So this is the next retracement for price to continue higher. That's what they would think. And there's also some traders that we think that that price is going to retrace, so they'll look for an retracement entry. And something you guys might say is that now what is the difference between this whole leg of price? How will you know that price doesn't want to do the same thing it just did here at this point? Don't worry, I'm going to explain it when I talk about the essential criteria to spot quality change of character. But basically what you want to see is for the bearish change of character, you want to see price creating higher highs and higher lows, and then keep creating it, and finally creates a new higher high, then snaps lower aggressively, breaking the previous higher low. This should be aggressive. How you know how you can identify displacement, aggressive move, they should be favorably appear. More on that as we progress. Right now, something you need to take note of: if price actually break this one and also break this one, it is even more high probability. And let me show you guys an example. So now, from now onward, you can expect price to be in a bearish order flow, right, until a higher time frame key level is hit. And as you can see, this will now serve as our liquidity sweep. So now for the bearish scenario, you want to see price in a downtrend forming lower highs and lower lows. Now you want to see price makes a new lower low, right? So now price trades aggressively higher to break the previous lower high. So you want to see price trade aggressively higher. And that last break of structure, that last break of structure that price created a new lower low will later serve as a liquidity sweep, and we can anticipate price entering in a bearish order flow onward. So this is what I mean. What do you see here? You see price in a bearish order flow forming lower highs and lower lows. So it was forming lower lows, highs and lower lows. Now what you want to see is price break this structure, break the next structure like this, and now you want to see price snaps higher, breaking this previous lower high. So this is where you get your change of character. right? So from now henceforth, you can anticipate price in a bullish order flow. This break of structure, this last break of structure before this change of character is essential. Why? This is what many people don't talk about, many traders don't really look at. But why this is essential is because one, this serves as a liquidity sweep and it actually traps traders. Right? It's going to make traders feel like okay, price has actually been in a downtrend for a couple of while now. Now, this next break of structure is most likely price is trying to do the same pattern they did here. So it wants to break this structure, retrace to premium and continue. That's what they're going to think. So that it tends to trap traders at this place. Traders might have their stop loss order at this zone, so they get liquidated. So this break of structure is essential because it serves as the liquidity sweep, and you can anticipate price to enter in a bullish order flow onwards. We are still going to build more on this because of you don't just take this kind of trade. You don't just see something like this and anticipate this is a change of character. This can be a liquidity sweep. Price might want to take out some buy side liquidity because when price is in a downtrend for a while, it needs liquidity to continue. It can't keep on going on a downtrend. So when it's in a downtrend, sometimes it comes to sweep out some liquidity at this place, mitigate the higher key level, and then continue lower. Now, the essential criteria and rules to identify quality change of character. Now you want to see a liquidity sweep and you want to see price trading to a higher time frame key level and you want to see divergence and you want this to be happening a key time of day. And this key time of day can vary, right? If you're a scalper or day trader, this key time of day can be your sessions. But if you're a swing trader or a short-term trader, this time of day can be the day of week. We have this weekly profile and certain days for especially for major pairs are usually the turning point of the week. Example, if the weekly bias is bearish, Tuesday and Thursday is when price forms the low and high of the week, and that's usually serve as the turning point of the market. So if this key time when this price is trying to do this change of character is occurring on Tuesday or Thursday, it makes it high probability. And the next one is seasonal tendency, and this is for long-term traders. All right, so let me go and explain what I'm trying to say here now. So what do we have here? We have price forming here. Basically, what we have here is the same pattern I showed you guys, right? The same valid change of character I showed you guys. The only difference is that we have price actually trading to a higher time frame key level, right? So now this is what differentiates this price action with this. Because if not, you might see this one and be anticipating something like this, or you might see this one and be anticipating something like this same pattern for price to continue higher. But what differentiates it is that if price is actually trading to a higher time frame key level, as it does this, then this is most likely going to be you should start anticipating that change of character, right? But if there's no key level here, there's no reason why you should be anticipating this change of character. You should expect price to continue in the bearish and in the bullish trend, right? And something to worth knowing is that you don't want to always try to it's good to be prepared for the trend to change, but you don't want to be like trying to force it, right? You only anticipate it. Even after this price, the trend is in a very is aggressively bearish, bullish, right? In this case, even as after a trade to this higher time frame key level, you don't want to start trying or wishing for it to change. You just want to anticipate it, right? Because when you come in with that mindset of this is going to change, this must change. It has hit this key level. What usually happens is that you tend to force it and you become biased in your judgment. So you are only anticipating it, right? So you want to see it trading to a higher time frame key level. You want it to be to form this previous higher high very close to this key level. Now the next break of structure will actually tap into this key level. This will serve as the liquidity sweep. A strong displacement lower, breaking structure. If this occur in a key time, if you want, you can neglect key time. And for the record, something like key weekly profile and key day of week they usually occur, and even sessions and even key time of day. Only something that I've noticed it works well only on major pairs, right? The pairs with the dollars, right? Because the dollar is one maybe, but minor pairs, I don't really think this works, right? But it might be long. You can go and do your own analysis, right? So this is the bearish example. the bearish change of character. Now you can look to enter at this place. Don't worry, we're going to talk about entry in more details. But basically, look at where you can look to enter at this place, or you look for a change, or you look for a lower time frame change of character, or market structure shift using the time frame alignment I taught you guys. Now, for the bearish example, still the same thing. We have price in a downtrend, and finally, price breaks the previous lower high, right? After breaks this previous lower high, it snaps higher, giving you a change of character. But the difference is that this is occurring in a higher time frame key level, and ideally you want to see this in a key time of day. Okay, so let me explain the last slide, the entry model, before I give you more examples to work with. So finally, the entry model. Now, before I talk about entry model, there's a couple of things I want you guys to be aware of. Right, so every time a change of character occurs, a new demand or supply zone is formed. You are to place a limit order at that zone. Target only 1 to 3 hours, right? And you can decide to look for lower time frame confirmation for higher risk reward. Now, I've given you guys a couple of rules that I want you guys to follow. And let me explain this using a schematic diagram. And this is a valid change of character occur. You can look to enter at this zone, at this place. This is where you look to enter and target your 1 to 3 hours. And so this is the bullish scenario. As you can see, just target your 1 to 3 hours. Now, let me give you guys a live example. So this is an example of a trade that we called in our free Telegram channel, right? So what do you see here? We see price breaking structure. After we break the first structure, price break the second structure. Now break the third structure. So from here down to this place, price actually in a bearish, is actually bearish. We are having lower highs and lower lows, lower highs and lower lows, right? So now finally price finally break the next structure. Remember what I taught you guys? Price break the next structure and aggressively break the previous lower high, right? At this point, this is a change of character, yes, but is it a positive change of character? Is it valid? Right. So what makes it valid is, number one, this key level we have here. We have a higher time frame key level that was actually hit before price made the change of character. So that's one of the things that make it high quality. And also, if there's SMT, honestly, I didn't check for divergence when I took this trade, but another thing is divergence and key time of day. So if it is there, it makes it high probability. So after price change, after all this confidence line up and we have this change of character, you can look to take your entry at this zone. Alright, so before we end this lesson, I just want to point out one last scenario that will occur, right, or one last insight that is going to really help in your trading now. Now, imagine a scenario where price is bullish, price is bearish, and price shifted bullish. Now, as price shifted bullish at this zone now, is this zone safe to enter? Now, I'm going to give you two reasons whether to take this trade, whether it's safe to enter. Now, if it is mitigated, if all this bullish side is mitigated, then it is safe to say that this structure, this change of character is actually valid and price is most likely going to continue to the upside. So you can look to take your entry, same as this, right? But now, if it is unmitigated, as you can see right here, it is unmitigated. Now you want to be very careful taking an entry at this zone. Why? Because something that can happen, or something that is trying to occur, is that price is most likely trading higher, breaking this structure just to mitigate, to take out some buy side liquidity, to mitigate the higher supply zone, right? So it's trying to mitigate a supply zone and take out some liquidity, some buy side liquidity, as it's doing that. And what price tends to do, or something that I've noticed that price likes to do, is to come down and smack you out, right, and continue to the downside. So you might think this is a change of character, but actually it's a liquidity sweep. So the best way to validate this, or the best way that have actually helped me, is looking to see if it's mitigated or unmitigated. If it is mitigated, then it is safe to enter this zone, because of there's no reason, there's nothing price is trying to mitigate here again. It's not trying to mitigate any of this key level. So it's trading up, it's most likely want to start trading higher, right? These other blocks, since they are mitigated, remember the video I make about valid zones and valid order block. Since they're already mitigated, this order block is weak. So it's unlikely that price is going to, this order block will hold price from continue lower. Alright, so it's most likely this shift is valid. But in this case where it is unmitigated, there's high chances that price is trying to sweep out some, take out some buy side liquidity, mitigate one of these zones and continue to the downside. And this is a unique scenario I want you guys to be aware of. If I see an example, I don't know, when I'm done making this calls, if I see an example, I might like to put it. It will take me time to go through our private group to pick out this example, but if I see it, I'm going to put it in this video. Right, so I hope you guys like this video. As always, don't forget to smash that like button, and if you're interested in videos like this, go and subscribe to the channel. And this whole PDF, if you need this PDF, I will leave it in our Telegram channel. It's a free Telegram channel, you can go and take it. And also in this Telegram channel, you'll be able to see us take trades like this. As you see us, I'm posting signals, free setups there, so you can actually take the trade. So you definitely want to go and join the free Telegram channel. I'll leave the link in the description. So alright, so that is it for this video.